Morning, Steve Free in Chicago with the morning grain comments. Well, we've got corn and soybean prices and meal prices lower. Wheat was higher, now about unchanged. Outside markets, the dollar is lower and crude is higher. CRB index is higher. I think that first of all, there were rumors out of Washington overnight that sometime soon the U.S. may impose a 10% tariff on another $200 billion worth of Chinese goods. China is expected to retaliate on that. This is down as far as tariff is concerned from the 25% that was initially thought, and there is some people to think he will eventually do another $267 billion of tariff to try to get the Chinese to come to the negotiating table. There are some in Washington that feel that before the midterm elections there will be a deal done, and so it's one of those things in which, if it does happen, Chinese could become a buyer of U.S. beans, with Brazil running low on their supplies, and that could rally the soybean market up from its current price levels. I think corn's kind of following. It has been following in these tariff wars. There's also talk that there may have been some harvest activity, and until the rains start coming midweek, there could be more pressure on the marketplace. The funds added to their short positions in corn last week, now short over 100,000 contracts of corn. As we mentioned, there is going to be some rain, soaking rains later this week that moves across the northwest and western part of the Midwest. It could be a little bit lighter as it moves into the central Midwest, but there is the far eastern part of the Midwest, especially Ohio, that's going to see rain from Hurricane Florence. As far as the wheat market is concerned, there was a frost in Australia that could cut the crop there. USDA's got a 20 million ton crop estimate, while some people think that the crop could be closer to 17 and 18 because of this frost situation. We also note that some people feel that the USDA's corn yield may be too high. In September, they did not take ear samples. They just used a model to come up with the increase in ear weight, and some people think that may prove to be too high of a yield. So we'll see if that supports the corn market. And then finally, last week, the Russians started tightening the quality controls on what wheat can be exported out of Russia. And so that may be the first step in them slowing some of their exports down, and could help demand for U.S. wheat exports. But again, the market is long a little bit of wheat. They've taken a lot of their long position out, but you actually need to see sales come in before the wheat market can rally. So again, we'll be watching Washington as far as trade issues are concerned. We'll be watching the demand for U.S. corn, soybeans, meal, and wheat, and we'll be watching the fund flow at these low prices. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.